Right, folks, it's Sunday the 7th of October, ready for the week starting 8th of October. We've just had the non-farm payroll out the way on Friday, so I'm hoping that we can get some movement and some trading opportunities this week, although I say that every week. Right, my old friend, the dollar index. We managed to push up through the 200-week moving average on Friday. We went a little bit higher into the non-farm payroll number last week, got up to 96.12. I warned about this trend line up at 96.42. Obviously, we didn't make it that far, but we certainly did reject it, and we closed below the 200-week moving average. So, I didn't expect this bounce back. I totally admit that, but it could be quite interesting. I'll show you why. I also just want to remind you of the 500-month moving average at 95.84. So we overran that on the grand scale of things, not by a lot really. What is that? 15, 30, not even 30 pips. So, you know, on a monthly scale, that's absolutely nothing. So I think that's important. Okay, and this is the daily chart for the dollar index, which surprisingly got back above the 500-day moving average last week. Didn't see that coming. Right. Now this is where it's all important. I thought this was a potential head and shoulders top. Shoulder, head, shoulder. That didn't work. We didn't break down lower. We, for some reason, bounced from the July low. As you can see, July low is 93.71. We bounced from 10 pips above it when we became oversold on the slow stochastic. Now we're overbought on the slow stochastic. With relatively negative well, the candles are certainly negative. I can't really call it a negative pattern. But could this now be a new head and shoulders pattern within a head and shoulders pattern? You know, you do get this head and shoulders within head and shoulders, and eventually when it breaks, obviously it's pretty nasty, or pretty good if you're short. So this could be the shoulder on the left side. This could be a head and shoulders pattern top, so that the top is actually a head and shoulders within a head and shoulders. Does that make sense to you? I've seen this before. And then this could be the right shoulder that we've just formed. Aggressive move up, squeezing out all the shorts that were short from this head and shoulders top, taking them all out. Now we have a potential left shoulder. Do we collapse to 93.80, which will be the new neckline, 93.90, 93.80, and do we break below that maybe in a week or two to start the move lower? Who knows? We'll have to watch, but that could be what's happening after we rejected that trend line up here. We could just be building a top pattern at this trend line. Okay, moving along. 4-hour chart. I need to start showing you some short-term charts while we're in these ridiculous sideways trending patterns. The 4-hour chart doesn't tell us anything. Certainly the moving averages don't tell us anything. Obviously they've been trending sideways for quite a long time. The fibs here give us some short-term levels, 95.60, 95.25. We've obviously broken this trend line and retested it. So it does look negative from that point of view as well. Sorry, I've got building work going on next door. Eventually we could get down to the 9500, 9480 area. I haven't talked about Bitcoin for a while because it's just done nothing really except go sideways. There's been a few good little short trades on this when we came up to the 100-day moving average. But I think it's about to move. We've got this triangle pattern here going back to the beginning of May, as you can see, and it does look like we can start to head lower. If we have a descending triangle is a negative pattern. We've tested this trend line so many times now. Surely the bears have got to start to take control of this. We haven't been able to get above the 55-day moving average for all of last week. We certainly haven't got through the 100-day moving average since the end of August. Even the 200-day moving average is about to cross below the 500-day moving average in the days ahead. So it's all looking pretty negative to me. I wouldn't be at all surprised to see us reject that trend line and start to head significantly lower. So if you're a bit of a crypto fan, you can trade this. It's probably worth, well, it is worth putting a short on, really. You can stop above 6,600 or at least above last week's high, which was 66.40, or was it, yeah, 60. Okay, so stop above 66.50, for example, if you're selling it. Not much risk. In fact, we'd really need to get through 6,800 for it to start looking positive. And then there is significant downside potential. Obviously, we could easily test the lows in September at 6,100. We've got the little trend line down here at 6,000. We break below there. We're going to be testing the crash low at 57.80, and I wouldn't be surprised to see a break below that either. Aussie versus the US is clearly negative. Big red candle for the month so far. This is the monthly chart. We've broken below this trend line going back to 2008, 10-year trend line. So that looks pretty negative. Showing weekly chart, obviously the same kind of thing. Doesn't show anything extra. On the daily chart, we can just see that we're breaking low. We're not even particularly oversold. So this all looks pretty negative. I would imagine that 70.83 will be important of the previous swing low, but any rally is likely to be very short-lived. Similar picture for the New Zealand dollar, looks negative. Big red weekly candle there. We've broken previous lows. There's just nothing positive about this, so you certainly don't want to be long. You want to be selling into any strength. Dollar yen, last week up to 14.54. You know what was going on there. I told you about these peaks up here around the mid $114 area. Couldn't get through 114.72, which is the high of this little triple peak type thing. We've got a shooting star candle, which is quite negative, really. It shows rejection of that resistance, and the market headed lower into the end of the week. So we're looking for some continued yen strength, weakness against the dollar. Sorry, strength against the dollar. We've got a little bit of trend line support here. You can see how nicely that's working. So if we get below sort of 113.50, it should start the next leg lower. Looking at 113.15.10 as the next target. Eventually we could easily get down to 112.20. Euro yen, tricky. You can see that I've got this 23.6% fib at 131.18, and we just keep spiking down and being magnetized back to that level. So the question is, do we break and hold below the 200 day moving average, which is at 130.95, and then actually start to see a move to the downside? I think we could, because we're breaking this trend line nearly 2 months old. We were chopping around certainly, but we are seemingly starting to hold below the trend line and the fib. So I think that is, well, it is definitely starting to act as resistance on the 4-hour chart. You can see these bars here not able to break back up above 130 area. So I think we will start to see a move to the downside in the euro yen. So further reason to believe that the yen will strengthen. Pound versus the yen is hitting resistance. We've got 149.31 as the high in July, 140, a bit higher there, 149.71 in August. 2 weeks ago, 149.08. Last week, 149.26. So the mid 149 area is obviously causing some problems for the pound versus the yen, and we've got the green 500-week moving average at 149.16. We didn't manage to break above that last week, so I wonder if the yen can also strengthen against the pound this week. 4-hour chart for the Canadian dollar versus the Japanese yen, also showing some strength in the Japanese yen. So this is the 4-hour chart, as I say, trend line going back to middle of July. We'll close it. We'll zoom in on that in a minute. But the fact that we're breaking below 88.00, 87.90, which I did have as support on Friday, but I'll show you on the hourly chart. So this looks quite negative now, as you can see on the 4-hour chart. We're just heading into oversold territory, but wouldn't worry too much about that. If I zoom in to the 1-hour chart and spread that out a bit, you know about that trend line. Now, the 200-hour moving average I thought would offer some good support, coupled with the 23.6% fib, and it did, but we only bounced to 88.29. Not really a huge profit in that, 30 pips odd, and not really what I was looking for. I thought we would be at least heading for the 88.40, 88.50 area. What's that? 88.44. 88.45, 88.55 would really have been my target, and we didn't do that. In the end, we broke lower and retested the 200-hour moving average, which held. So this looks pretty negative to me. It now looks like we should be selling anywhere around 87.90, 88.00, maybe, well, a stop above 88.30 would look okay, wouldn't it? That's only a 30 pip stop. And on the downside, we should be targeting 87.20, 87.10, which you can see is some confluence of Fibonacci support. There's definitely some price action down here to support that, to add weight to that being a support level. So if we can sell around 87.90, 88.00, and this trade does work, we could be bagging a good 80 pips on that one. Definitely worth it for a 30 or 35 pip stop. Aussie yen a lot weaker, which isn't a surprise because we're seeing some dollar strength and we know that the Aussie's weak, and that looks like that's going to continue. 4 big red candles there. No reason to suggest that this won't be heading towards Yeah, 70, 79.30 possibly. There could be another 100 pips on the downside for sure. Euro versus the Canadian. Well, we talked about some Canadian weakness against the yen, and we could see Canadian weakness against the euro as well. Last week's hammer shows quite some positivity for the euro against the Canadian dollar, and we closed above the 100-week moving average. On the daily chart, not showing much, but if we can get above the 500-day moving average at 148.98, we just closed above it on Friday. That could see some further strength. We do need to ease this oversold situation as well, so just some short-term strength possible. And when we look at the 1 hour chart, we certainly are moving above the 23.6% fib at 148.90 and this little trend line here, which you could call a neckline to a potential head and shoulders pattern. So if that was the case, then we've got we've got a good 100 pips from the break of the neckline. So we could certainly be heading up to fill that gap at 149.72 with 38-point fib resistance at 149.74. So and we've got the 200-hour moving average just closing in on that level as well. So 149.70, 149.80, a target, and certainly some strong resistance there. So if you fancy buying it around 148, 149.00, 148.90, where could you put your stop in? That's a bit wide for me. I would suggest a stop below 148.60, still quite wide. 148.70 maybe, 148.65 would just about make the risk reward worth it, risking about 30 pips. And if it works, we could be looking at 70, 75 pips on the upside. So that risk reward would be worth it. It's just a little, it's not the strongest signal I've got, but it's just something worth pointing out to you.